Good morning, everyone. This is Anthony, Wall Street Trader's son, and it's 8:51 a.m. Eastern Standard Time, and it's Sunday, June 20th, 2021. Before we get into this video, let's go through the disclaimer real quick. This is not financial advice. The opinion you should follow should be your own and or with a financial advisor. This video is for educational purposes and to outline my own personal opinions as well. To stay up to date with my latest videos, click the subscribe button. Also, the twitter.com link below. So my dad bought the graph at about 81 cents. And now here's my dad.
Okay, right on to the markets. Thank you, son. And happy Father's Day to everyone. So let's just go straight through the graph to US dollar. So right now we're at 57.43. Look, we're under pressure. There's no question about it. A lot of it being driven from Bitcoin. As you can see up here on the right, top right, you can see Bitcoin, the graph US dollar. Remember what I always say is if you look at this chart here, the GRT USD is equal to Bitcoin multiplied by the graph relative to Bitcoin. So let's take a look at here. So the graph US dollar is equal to Bitcoin multiplied by this. Well, Bitcoin's down 4%. So if you add these percentages together, 4.5 minus 4.4 on or about, you get around 4.17%. And that's what so the negative downward action on the graph is really driven by the Bitcoin US dollar pair. Make no mistake about it. This is a Bitcoin driven, yet another fear-mongering type of hype that's going on. We're going to run through what that is. That being said, we're still not in a scary range here. Look, we're okay. So we're low. We're on the bottom end of this whole period between the 18th of May all the way to now. So look, I think we're going to get another rebound here, but we need to let the Bitcoin world play out. I'm going to explain why Bitcoin's under pressure in a second, but let's look at the relative strength of Bitcoin. We're still good here. Like, this is not in bad shape. We just need to just stay where we are here, let Bitcoin's drama play out and level off so that we can, continue our confidence in the altcoin market. As we've talked about relentlessly in the past, the altcoin market is driven by mostly retail folks. So there's a little bit of scared money right now leaving. However, proudly enough, as a graph holder, we're doing well on the graph to Bitcoin pair. So I'm happy about that. Now let's look at Bitcoin and what's going on here. Now we've gotten a little bit of recovery from earlier, but as you can see, there's been some news around what's going on with Bitcoin. Now I'm just going to open up, I'm just going to hide some of these lines here for now so that we can get a better view on what's going on. So looking at the news recently, we're seeing that Bitcoin dropping ahead of looming death cross. And I've seen this article 100 times since yesterday. And let me tell you and explain to you why this is kind of additional bunk that you can almost dismiss because it's as good as flipping a coin at this point. So basically what they're talking about, a death cross. Let's just run through what a death cross is. But first, it requires a little bit of understanding of what a moving average is. A moving average, let's talk about what a moving average is. A moving average is basically an average of past price action history over a period of time. So for example, a 50-day moving average, which is the MA50. By the way, the MA50 line is the line that's in green. The 50-day moving average means of the last 50 days, what was the average closing price for each one of those 50 days, and then you add them all up, and then you divide it by 50, and it gives you an average. So that's basically what this green line represents, and it always looks back. For every plot that you do on that green line, you're looking back 50-day period, adding those numbers up and dividing by 50. So that average, which is the shorter term price action, is about to drop past or below the 200-day moving average. And the 200-day moving average looks back 200 days, adds up all the ending closing day prices. So 200 prices divided by 200. And that's how you get the 200-day moving average. So when the 50-day moving average goes below The 200-day moving average, which is the one in red, that's what's considered a death cross. Now, the death crosses don't always resolve. Look at two cases here. Here's a death cross. Here's a golden cross. So the death cross is like the scary part, and the green cross is where the 50-day moving average goes above the 200-day moving average, which is a good cross. So the red cross is bad, green cross is good. Well, what's happened the last few times? I don't see much happening here. Look, I mean, this last red cross was at 88.91, and then between that red cross and the next green cross was basically the same. So look, I'm not buying this hype about it crossing crossing through this red cross over here. I don't we might see some temporary downside action, but don't run for the hills over this stuff. It's generally speaking not very predictive, to be honest with you. So I'm not fearing it. Fear it if you may, but I think we should look at the longer term view on Bitcoin. You'll be better off, as well as making sure, look at the positive action coming out from Texas, for example. Yet another state. We talked about their adoption, about how they're helping to some of the Texas and Miami welcoming Bitcoin miners. Here's another example. For example, HEB, which is a chain in Texas, now adopting Bitcoin as payments, which I think is another fantastic piece of news. There's a litany of good news. I didn't want to go through all of it. I just want to just talk about what's creating this stir on the Bitcoin side. But anyway, I'm out. Happy Father's Day to everyone, and
Happy Father's Day to all fathers.
take care, everyone. Bye.